Back in 2023, Purpose Investments introduced us to their new high-yield Tesla ETF. I think it is time we see how well this fund has performed. Fasten your seatbelts, folks. This is going to be a good one. YTSL is the Tesla Yield Shares Purpose ETF, and it was launched back on January 9th with a starting price of $14.85. Now, Tesla opened that same day with a share price of $118.96. We will be using Tesla as a benchmark throughout this video, so it never hurts to see where they both were when it all started. This ETF was designed to maximize the yield from holding Tesla shares by using covered calls and, well, also a moderate amount of leverage to really put a pow in that dividend step. Covered calls are written on up to 50% of their Tesla holdings to help generate more income for their generous yield. Essentially, they are selling a contract that allows a buyer to purchase Tesla at a specific price and, of course, a specific time frame. Purpose gets to keep that premium, the cost of the contract, no matter what happens to the price of Tesla shares. In a worst case scenario, Purpose would have to sell their Tesla shares at that strike price if they rise above it. As a result, they do miss out on some of the upside. Purpose will then usually wait for a correction to, of course, rebuy those shares if they had to sell them. I also mentioned that they do use a moderate amount of leverage, which can further enhance these returns. Leverage involves borrowing more funds from their broker, which allows them to make bigger investments or moves within the fund. The danger, of course, is that if the price of Tesla were to fall more than they anticipate, it could lead to this dreaded margin call, which is never great, as you often have to sell some shares to cover it, and often, well, at an undesirable low price. Leverage does add risk to the fund. It's thus very crucial for Purpose to carefully manage these risks, so they're keeping an eye on market movements, margin requirements, and their overall investment portfolio's health. Of course, we will be seeing in just a little bit if they were successful with that. Join today's conversation. Let me know in the comments if you hold any YTSL. Thank you for your participation. If you love this sort of content, be sure to hit that subscribe button for more, and another huge thank you for that click. As I said earlier, we will be using Tesla as the benchmark to really put this ETF to the test. Taking that into consideration, Tesla has not had a great year, and that will 100% reflect in this ETF's performance. The question will then become, have they kept pace with Tesla's fall? Also, of course, which will give you the better total return? I do want to add that Tesla just came out with new earnings just days before I filmed this video, and despite their losses in the quarter, it was still exciting for shareholders, as evidenced by a nice 12.38% jump in their stock price. YTSL, they had a similar but a wee bit nicer jump of 13.82%. So the first tiny skirmish, I guess, goes to YTSL. Okay, we really do need to jump into the data, and if there are numbers involved, we need to call on that guy who does fractions for fun, the one and only Mr. Math. As usual, we will start off with a little surface data. They have a current value at time of recording of $14.85. The NAV comes in at $12.49. Their assets under management or net assets come in at $85.6 million, and we do not have a beta for this one. Their price to earnings ratio, that comes in at 57.50, but once again, in this type of an ETF, that number's not that useful. They do have an average volume of 153,820. Now, of note, a couple of days ago on April 23rd, they actually had a volume of 229,732, which of course was in anticipation of that Tesla earnings call. Their return on equity, negative 4.66%, and their return on assets, negative 2.39%. The surface data looks okay, and the negative returns on equity and assets make a lot of sense with the underlying asset in this ETF having fell as much as they have in the last year. Okay, let's move into a few fund specifics. They have a management fee of 0.40%. This doesn't look too bad, and at first glance, it seems really good for a fund using covered calls and leverage. However, you always want to look a wee bit deeper, and then you will see that the management expense ratio, yeah, that's coming in at 1.70%. This makes more sense, as this is an account with a lot of management. In fact, there are two fund managers for this account. Let's look at their holdings. Yeah, Tesla.
This might answer your question. Ownership is the state or fact of legal possession and control over property, which may be any asset, tangible or intangible.
Thanks, Alexa, thanks.
Good morning, Candace. My pleasure. Just doing my job.
So, we know this account has a higher fee than most ETFs, and that is deducted before they announce the dividend, so it will come into play in lowering our overall return a wee bit. Okay, let's peel back another layer and move into those returns. We'll start with their dividend. They have a yield of 28.81%. That's a monthly dividend of 30 cents per share. That's not too shabby. Now, let's move to their return on investment. We'll start with the 2-year. There's no point in doing the 3-year. They haven't even been here for 2 years. The price fell from $14.85 to $14.25. That is a return on investment of negative 4.04%. However, let's factor in all of those dividends, and holy banana bread, we get a total return of 32.36%. What about Tesla? In that same time, Tesla had a total return of 36.99%. So since inception in January of 2023, Tesla has done better by just over 4%. But if you were to reinvest those YTSL dividends back into YTSL, they would actually finish closer to a 39% total return, which would beat Tesla by 2%. That's not too shabby at all. All right, let's look at the 1 year. So for the 1 year, oh gosh, they did fall quite a bit, from $17.55 to $14.25. That's a return on investment of negative 18.80%. Factor in those dividends, we get a total return of 5%. Let's look at Tesla. In the last year, Tesla comes in with a total return of 6.76%. Once again, Tesla just wins by a nose, but if you reinvested those YTSL dividends, they will once again pull ahead. You'll actually get a total return closer to 11.85%. So that's absolutely pretty darn cool. All right, let's look at the year to date. This one does really hurt. They fell from $24.62 to $14.25. That is a return on investment of negative 42.16%. The dividends don't help much. We finish with a total return of negative 36.03%. Tesla, in the same time, they finished with a total return of negative 34.84%. So Tesla wins again, but let's keep this going. If we reinvested those dividends into YTSL, their total return comes in at negative 32.37%. So with reinvestment, they win again. This was a very interesting return situation, as I normally do not look at how much more you can make if you reinvest those dividends. It was nice though. It was actually quite cool to do it for this fund, as they win in the end if you reinvest. I think we have enough data to ask that question. What is my final verdict on YTSL? Tesla has not had a great time in the market as of late, but they do have a past history of making very impressive comebacks once a lot of investors have lost hope. Well, we are in that place now, so maybe it is time for Tesla, though I honestly think they do have a little more pain before gain. Tesla's future, of course, ties into the future of this ETF, as they are the underlying asset, and where Tesla goes, YTSL follows. So whether or not we look at if this is a profitable ETF, we first need to look at those benchmarks. This ETF does a little better than Tesla if you reinvest the dividends back into this ETF. If not, you're going to slightly underperform. That answers how this ETF does with the benchmark, but it does not really answer if this is an ETF you should have in your portfolio. This goes back to Tesla and your faith in Tesla, well, as a company. A lot of analysts do believe that Tesla will do well in the next year. And in fact, they've got a price target of $190.87 for a growth of a nice looking 31.9%. I do think this is possible, but I do also tend to fall a little more on the conservative side with my expectations. I do see them doing better in the latter half of this year, and that could be an opportunity to grow in an ETF like this for that ride. And of course, you're going to reinvest or drip your way through it to ensure that you're beating, well, that Tesla benchmark. This is a good passive income ETF, and if you have an income-focused portfolio, it's hands down could be a really good part of it. If you are interested in YTSL, don't forget to put in a whole heaping helping of due diligence before you place any of your hard-earned money on the table. Let's continue that learning journey by checking out this video on XEQT. Thank you for watching, and I will see you in the next video.